Hey, welcome back to Two Super Guys Red Sox. I'm Dylan.
And I'm Vinny. And man, oh man, my favorite stock to buy of late has been Google. They reported earnings this week. We're going to take a peek at them and decide whether or not I should be buying more right now. That's the real question.
After the
Yeah, I
bump?
know, right? After the bump, man. So you
Okay.
got a nice little bump this week, right? This is the response that the market gave to earnings. So pretty positive, right? The 3.5% in like 5 days. That's solid. You know what's wild? I did not realize though. Is just where we are this year for Google stock. Did you realize we were basically flat for the year so far?
Yeah, I kept on accumulating between 155 and 160.
Nice,
So I was
sexy.
pretty happy.
Yeah, yeah. Google is like an absolute powerhouse of a company, man. Just look at this revenue growth over time, just like churning away, just chugging away. Looks like a monopoly. We'll talk about that briefly at the end. Uh, the net income, same thing, man. They bring money in the door and they drop it efficiently to the profit and loss statement. Like it's amazing to see the companies of this ilk. People say like, oh, why you just follow these mega cap tech stocks? It's because of stuff like this, because they're absolute profit machines, which is just insane, right? And holy crap, look at that over time. They're just chewing up shares. How wild is that? That's what happens when a company knows how to reward their shareholders, right?
Yeah, I actually did not know they bought that much back in this
Yeah,
last quarter.
yeah,
That's
yeah.
impressive.
I think in the most recent quarter they said it was about 15 billion in share buybacks is what they said on the conference call. All right, so this is what you're seeing from like the CNBC reporting, right? They beat on top and bottom line, but they actually announced that they're going to increase their expenses this year in terms of capex. So revenue growth 14%, mid like teens is a phenomenal growth rate for a company that has like $100 billion a quarter in revenue, which is just what Google pulled off this quarter, like basically $100 billion. It's
Yeah.
insane how much revenue they make. And like I said, they were efficient enough to keep their margins intact and deliver most of that to the earnings per share line. Right? All right. So revenue 96.4 billion. That's compared to 94. So they beat expectations on the top line. Bottom line $2.31, 218 expected. So they also beat on the bottom line. All segments across the board were beating numbers, right? YouTube 9.8 versus 9.56. Google Cloud 13.6 versus 13.1. The traffic acquisition cost being up is that we can talk a little bit more about with the antitrust stuff, which is like the only downside to this play at all, basically the way I see it. Um, all right. So they talked about how they increased in their capex another 10 billion for this year in terms of their expectation. Street had originally expected a little under 60 billion. They said back in February it's going to be 75 billion. Now they're saying it's going to be 85 billion. All right. And it was raising it due to strong and growing demand for our cloud products and services. All right. They actually gave a number to this in the conference call, which is not something you see right here. Over $100 billion in backlog, they said, in terms of business that's already sold that they just haven't put online because they haven't had the capacity yet.
Oh, okay.
Yeah,
Yeah, that's
yeah,
cool. That's
yeah,
dope.
yeah. I mean, like the future value of all their contracts, right? Like $100 billion. How crazy is that to have that just sitting there begging for you?
That makes
Yeah,
sense because usually when you say you're going to spend 10 billion more, the market would not be super happy about
yeah,
that. So now it makes sense because
yeah.
they were obviously very happy.
Basically, like the market is just saying like AI me daddy is what I would sum this up as.
Yeah, which I'm gonna say something about that at the end, but I'm gonna let you keep going.
All right. So cloud computing segment, they up 32% from a year ago. Phenomenal numbers, right? They talked about how this is leading to margin expansion in that particular area. So not only is it profitable, that particular segment, it's getting more profitable as they scale.
Nice.
Yeah, yeah. So that's a
Jesus.
problem to have. Net income up to $28.2 billion, or 20% from the previous year. Like I said, so revenue grew 14%, net income 20% growth. Yeah, yeah.
And this is a $3 trillion company too. Well,
2.3.
almost.
Yeah. So they also talked about the growth rate for their AI summaries, right? Growth rate quarter over quarter, it went from 1.5 billion monthly users to 2 billion, right? 30% growth in a quarter for one of the product lines. Yeah,
Okay.
yeah. Are
Jeez,
your
man.
nipples hard? Because mine are.
I mean, this is why I was accumulating. So I'm happy about it.
All right. So, all right, this is where that kind of runs. I like to do the free cash flow yields kind of calculation.
Doesn't apply.
However, we're in a massive investment cycle, right? So
Yeah,
it's not the best metric at this
it's
point anymore.
terrible.
If you look at what their free cash flow per quarter was going over the last year here, right? You're looking at 17.6, 24.8, 18.9, and now 5.3. Like, bleh, right? This is what Meta did a few years ago in terms of
Yes.
their free cash flow just falling off a cliff because they were investing massively. They were ahead of the curve. Google is also like a forerunner in many ways in terms of their AI infrastructure. However, their big investment cycle seems to be starting now. Right? That's why if you look at the trailing 12-month free cash flow, it's only 2.95%. If I were to basically annualize out at about $80 billion, which is, I think a rough number based upon what you were seeing previous quarters, excluding this most recent one, you're looking at a more like a 3.5%. Not fantastic, not where Google was when it was 5% not that long ago. But like instead of going into a major investment cycle, this isn't really the metric anymore. So with that said, basically, man, Google, the only thing we have to worry about with them right now is the outcome of the two antitrust cases that the federal government won against them, right? They're still in ultimately like settlement negotiations there in order to figure out what the US government seeks or the DOJ seeks from Google in terms of divestiture of assets and breakup of the
Right.
company. They're not really sure what that's going to look like yet. That's the
Which
real question, right?
we had looked at a while ago. It's likely, we have no idea. It's likely that could last till like 2030. So that could be a very long process. Also, with the addition of OpenAI, that may have changed because we had done a video about how their monopoly on search had actually slightly decreased since the advent of AI. So it's very possible that during the settlement they can just not resettle, but maybe not have a breakup of a company because the initial terms of it have changed. So
Yeah.
one thing I do want to talk about super fast. I've been seeing a lot of stuff on Reddit, a lot of stuff on like CBS, like all those articles of how AI is the new .com bubble, right? Because AI, everyone's rushing into it. It's going crazy. It's the new .com bubble. Everything's going to burst. That is very false. And the reasoning is during the .com bubble, you had all these huge investments in companies that had zero profit, that were literally not showing anything. But now you have Meta, Google, Microsoft, who are the leaders of it, who without it are already making billions upon billions of dollars. So
Yeah.
it's it's not accurate. So people are saying like this AI thing is very, very overvalued. Before AI with NVIDIA, still $2 trillion.
Mhm.
So I don't doesn't matter. They were still
Yeah.
making 20 billion and shit. Like it's not even close. So
Hmm.
I just don't see that happening. I don't see a .com crash. I see a minor correction. I don't see a .com crash status happening because of, AI's overvalued.
Yeah.
Not a
And
fan.
I completely there with you. These companies are absolute behemoths making tens of billions of dollars per quarter. And they're not, kind of fly by night startups that are coming out with an
No.
AI product like we saw during the dot-com bubble. These companies, like I said, are well established. And what they're doing, instead of having this one major core AI product and that being their only product, they're using this AI like technology in order to leverage multiple other business, kind of avenues
Hmm.
or subsets that they have in order to make things more efficient. They're having better click-through rates, better conversions. So they're selling you a better product at the end of the day, leveraging the power of AI. It's not the same thing.
It's not the same thing. And there's a lot of analysts who we've done a video on how accurate they are. Turns out about 50% of the time. So coin flip. And that's if it's going to go up or down. So two options. A lot of analysts calling for a .com level crash because of AI. It is
Sure.
completely illogical to me. I don't
Yeah.
I don't get the reasoning at all.
Yeah.
So
Yeah. All right, guys. Well, let us know. Are you buying Google shares down below? We want to
wait,
know.
hold on. Are you? You didn't answer your question. At
Yeah,
this
yeah, yeah.
price?
I'm looking to still actively accumulate Google, I think, at this price range.
Okay, all right. That's the
Yeah.
whole premise of the video. I forgot. All right.
Yeah.
Bye.
Catch you